The US dollar is looking to extend its upside momentum in early trading this morning. Here to discuss is the managing director at Moody's Investors Service, Atsi Sheth. Atsi, good to see you here this morning. What do you make of the action we've been seeing lately in the currency markets, particularly with the US dollar?
Sure, Alexis. What's happening is that the US dollar value fluctuates depending on a variety of factors. So what you saw early in this crisis, say in March, was the dollar gaining a lot because of global risk aversion. And then what you saw sort of following the last few weeks is as risk appetite started to come back, some of those gains were given away. What we're seeing now is I think just sort of the market balancing global recovery that's proceeding against the monetary policy moves that are being made in the US, which is, the Federal Reserve has announced that rates are pretty much going to stay lower for longer. And the dollar value will go up and down, I think, depending on where the balance tilts for the market.
Atsi, is there another severe leg lower in the dollar, just considering where this country is on its debt position?
It's a good question because you would expect this to happen in other countries. So if in emerging markets, for instance, you saw debt rising as fast as it is in the US, certainly the currencies do suffer. But the US is really unique in that it is the reserve currency of the world. And that gives its government, the US government, really unique funding capacity. So yes, debt is rising and we expect it to rise to record levels over the next few years. But just given the position of the dollar in the world, it's how trade is conducted. Most global financial transactions need the dollar. That gives that dollar sort of an intrinsic strength that the debt can't take away.
Atsi, how do you expect the currency markets to react as we move closer to Election Day here in the US?
Well, it depends on the announcements that come out as we move closer to Election Day. So I think there are a number of things that the market will be watching for, the currency market will be watching for. One is on rates. I think we have a fairly clear picture from the Fed that the Fed is going to be patient in terms of raising rates. So that's one thing we know. The second is policy announcements closer to the election and US-China, for instance, and what happens with trade tensions there. That has implications for currency markets as well. And the third is, of course, the pandemic itself and policies towards sort of either putting in sort of fiscal stimulus to alleviate some of the pain that the pandemic is causing. So I think those three different factors will affect how the dollar goes either up or down.
Certainly, Atsi, the Fed, to your point, really is making it rain free money. What type of effect is that position by the Fed having on international currency markets?
In some sense, because again, the dollar is sort of a funding currency, the fact that there will be a lot of liquidity that will be provided to the market should send a sort of easing signal throughout the world, and it is. At the same time, when the dollar, for instance, the dollar itself was falling a little bit lower, that's propped up emerging market currencies a little bit because emerging market currencies tend to suffer when the dollar strengthens a lot. So the lowering of the dollar certainly supported emerging market currencies. So in general, easier US Federal Reserve policy tends to be easier global financial conditions and hence good for foreign markets as well.
Atsi, Goldman Sachs currency strategists have warned recently that the US dollar, is in danger of losing its status as the world's reserve currency. Do you think that the dollar's demise has been over-exaggerated?
It's one of the reasons why people sort of ask questions about the dollar's standing is the fact that US debt is rising. The US economy, while it's still much larger than all other economies in the world, China has been catching up. But if you think about the dollar's position currently, and you think that, well, it's going to be replaced by something else, that something else is not clear at this point. What would replace the dollar is really something that people don't have a very good answer to. That there's a multiple, it could be another currency, but again, most foreign currency reserves by central banks all over the world, they're still dollar denominated. So it's really difficult to see that demise happen imminently. Over a longer term, perhaps, but not imminently.
All right, Atsi Sheth, Managing Director at Moody's Investors Service. Thanks for being with us this morning.
Pleasure.